For many investors, this week felt like a roller coaster. By Friday afternoon, history was made. The Dow Jones Industrial Average crossed 50,000 points for the first time ever. It was a powerful psychological milestone that suggests the broader economy is still resilient. But if you looked at your portfolio earlier in the week, you probably felt something very different. Technology stocks were under pressure, and volatility was spiking. If you checked your 401k on Wednesday, you might have felt confused by the sudden swings. One day, markets rallied. The next day, they pulled back. So let's walk through what actually happened, why the Dow hit a record while tech struggled, and what this means for your money long-term. The market week ran from Monday, February 2nd, through Friday, February 6th. Overall, the performance was mixed, driven by a rotation out of expensive tech and into industrial strength. The Dow Jones Industrial Average finished the week higher, gaining momentum from industrial and healthcare companies to secure that historic 50,000 level. The S&P 500 finished close to flat in percentage terms. It was caught in a tug-of-war between struggling tech names and rising cyclicals. The Nasdaq Composite lagged behind the others. It ended the week lower as investors took profits in large technology companies following mixed earnings reports. What stood out to me this week was how sensitive investors are becoming to forward guidance. Good earnings from the past quarter were not enough. If a company did not promise strong growth for the rest of 2026, the stock was punished immediately. Let's talk about top stock gainers. Several companies defied the volatility and posted strong gains driven by clear positive developments. Number 1. The highest gainer of the week was ENPH Energy. The stock moved sharply higher after the company reported better than expected results and offered an encouraging outlook. Management suggested that inventory issues are clearing up, and demand in the residential solar market may finally be stabilizing. Number 2 was DaVita. This dialysis provider climbed strongly as solid earnings and confident guidance reassured investors that healthcare services demand remains steady, regardless of the economic cycle. Number 3 was Supermicro. Shares advanced as demand for data center equipment continued to show strength. Even with broader tech volatility, investors remain focused on companies that provide the picks and shovels for long-term infrastructure growth. Number 4 was McKesson. The company gained after reporting dependable results and reaffirming its financial outlook. In uncertain markets, investors often flock to stable business models like pharmaceutical distribution that offer predictable cash flow. Number 5 was Eli Lilly. A stock move higher as continued strength in its key drug portfolio supports confidence in future revenue growth. It is a reminder that innovation in healthcare continues to be a major driver of market value. In each of these cases, investors rewarded companies that could prove their business momentum is real, not just hype. Let's talk about top stock decliners. On the downside, several well-known companies had a difficult week. It is important to understand why. Number 1, the biggest decliner was Peloton. Shares fell sharply after disappointing results and continued concerns about subscriber growth. Investors are weighing whether this is just a bump in the road or a fundamental issue with the business model. The concern here is deep. Can the company return to consistent expansion in a post-pandemic world? Number 2 was Advanced Micro Devices. AMD declined even after reporting solid recent performance. The drop reflected cautious forward guidance. This looks more like a short-term reset of expectations rather than a broken business. Investors are realizing that chip demand may be uneven across different sectors. Number 3 was Snap. The stock moved lower after weak user growth and advertising trends raised questions about its near-term revenue outlook. This decline highlights the fierce competition in digital advertising. Investors are balancing the platform's potential against the immediate pressure on its ad business. Number 4 was Estée Lauder. The beauty giant dropped following cautious commentary about global demand, particularly in travel retail. While the brand remains iconic, investors are reassessing how quickly international sales can recover given currency pressures and slower spending in key markets like China. No. 5 was Molina Healthcare. The stock slid after results and guidance came in below expectations. In this case, investors are reacting to specific operational challenges regarding costs, rather than broad market forces. The key takeaway here is differentiation. Some drops, like AMD, seem to be about valuation resets. Others, like Peloton, reflect deeper questions about the company's future. Here is the big trend of this week. The dominant theme this week was the Great Rotation. We saw capital moving out of high-flying technology stocks and into real economy sectors like industrials and healthcare. That is exactly what pushed the Dow Jones past 50,000. For households and retirement savers, this is a reminder of why diversification matters. If you only held tech stocks this week, you felt pain. But if you owned a broad basket of U.S. companies, the rally in industrials helped cushion the blow. At the same time, inflation expectations remain in the background. Investors are watching closely to see if a strong economy will keep interest rates higher for longer. This impacts everything from mortgage rates to auto loans. What investors are watching next week? Looking ahead, 3 areas are in focus for next week. Number 1 is inflation data. New CPI numbers will be released. This is the big one. If inflation shows signs of heating up, it could dampen the celebration around the Dow's record high. Number 2 is corporate earnings. You will hear from more major companies across the consumer and hospitality sectors. These reports will tell us if the American consumer is still spending freely or starting to pull back. Number 3 is labor market data. Jobless claims and employment trends will offer clues about the health of the economy. A strong job market supports spending, but the Fed wants to see it cool down just enough to keep inflation in check. Each of these reports could shift market expectations, which is why we will be watching them closely. Weeks like this can test your patience, but they also prove the value of staying the course. The Dow hitting 50,000 is a reminder that over the long run, the U.S. economy tends to grow. For long-term investors, the goal is to stay informed without reacting emotionally to the daily noise. If this recap helped you make sense of the week, consider subscribing for future updates. And share in the comments, are you buying this dip in tech, or are you looking at safer sectors right now? I'll see you in the next update. This content is for educational purposes only and is not financial advice.